John, good to see you. Congrats on releasing the letter. I appreciate you making the 50 minutes to talk with us today.
Yeah, glad we can chat.
Well, I think the letter that you published, Stripe's annual letter today, definitely caught everyone's attention. I'd love to call out a couple of the headline takeaways, but it's great to talk with you and to hear a little bit more about the detail, and especially to focus on all the forward-looking pieces as we go into the next decade for Stripe. So congratulations, first of all, on a huge 25% jump in year-over-year payment volumes and hitting 1 trillion in annual payments, a huge milestone to cross. And I hope the team's getting some time to really appreciate how far Stripe has come in short order and celebrate today. Also want to call out that the output of businesses running on Stripe now sums up to about 1% of global GDP. Huge strides forward, and just a preview, I think, of what's to come next. But possibly most excitingly is I saw that Stripe is breaking out its RFA, revenue and finance automation revenue, and expects RFA to pass $500 million in total revenue over the next year. And more interestingly, there is a lot of dissection about how especially larger companies and incumbent players have really been using Stripe's revenue and finance automation suite to better optimize their business practices, to be more proactive with their customers, and to manage their own businesses more efficiently. So I'd love to hear from you, if we can just dive into the product right there. What excites you about RFA, especially looking forward, and how has this really contributed to Stripe's overall mission to grow the GDP of the internet?
So this is a more hair on fire problem for businesses than payments, as far as we can tell, where we often talk to businesses where they have, either they use kind of an existing provider who they're not happy with, or they often have a homegrown solution that's just becoming unmaintainable. And, the person who built this kind of billing system that they have, they left 5 years ago, and no kind of people are afraid to touch it, but they need to launch new products. And what are we going to do? And again, the shocking thing to us is the frequency with which business priorities, like a geographic expansion, we're going to launch in new countries, or we're going to test new pricing or something like that, is really blocked by these systems. And so it's kind of tied to, we shared the stat that I really find quite striking of the average tenure in the S&P 500 shrinking over the last decades from 61 years. It used to be the case that on average you spent 61 years in the S&P. At now 18 years is that average, which is a really short amount of time for like a large cap company. And I think it just gets to the point that you can't just turn up in the office and keep doing the same thing again and again and expect to maintain, your competitive position. So you constantly need to be launching new services and offerings and changing up pricing and changing up things. And so if you're going to do that, you need a platform like RFA to be able to do that. The other thing that's maybe notable about it is people kind of associate Stripe with payments. We've been doing that since we launched, whereas here, this was a tiny fraction of our revenue 5 years ago. It's now a real contributor, as you can see. And so it's just grown to become quite a significant business for Stripe.
I agree. It seems to demonstrate that Stripe is really in a transition from being a payment facilitator or a payment service provider to being a more full-scale platform for businesses to interact with their customers, to manage their revenue, to manage their sales, and to develop insights to understand how their business is growing over time and leverage those to be more effective.
Well, okay. I think this maybe gets to an interesting point, which is categories and labels are a very dangerous thing. We've never identified as a payments company. We've never identified as a fintech or anything like that. We come from a software background ourselves. We've always prized technology skills and software very highly at Stripe. And we've always tried to do the things that our customers tell us that they want. In B2B, you don't have to be a genius. You just have to keep talking to your customers and understanding what their business problems are. They don't have to do exactly what they say, kind of Henry Ford, faster horses style, but it's an open book test, right? The answers are right there if you're just willing to go talk to people. And so, most of the other people in payments are, there's all like the big banks, there's like the legacy payment companies, the WorldPays and First Data and all those kind of folks. I think it's a bit of a stereotype threat if you just decide you're a payments company, this is what I do. And so in our case, revenue and finance automation was a totally natural outgrowth of solving problems for customers, where we started doing payments for people and they'd say, well, I'm actually developing a subscription service. And they'd say, okay, well, I guess it doesn't make sense for everyone to have to build the same thing all over again. And so we can just provide that for you on tap. And then, sales tax and, VAT management and stuff, that was the top user request before we went and built it, because everyone had to deal with the exact same stuff of like, I guess I owe sales taxes on this stuff that I'm selling online, but like, taxes are deterministic. They are, there's a big old list, and you can look up what is the tax rate for different products in different places. And so Stripe can build this once, and then the millions of businesses that are running on Stripe can benefit from this. But I think it gets to, again, this important point, which is it is very dangerous for a company to pigeonhole itself. And in our case, the strategy has been be responsive to what customers tell us they need. And that has been being all kind of the financial infrastructure to run their business on. But we didn't kind of start with that category and decide what products based on that. Instead, that is the emergent category from the stuff that businesses asked us for.
Well, I'm sure if you stack ranked the list of product requests that your customers have, it would be a very, very, very long list, and that prioritization.
Well, we do, and it is like we have a big, huge, long stack rank. They're as long as your arm, and you can't always get to all of them, and you have to triage. And there's a real nuance to what you work on and what you don't. But I think that is the art of B2B product development, is taking this list of literally 1,000 customer requests and triaging what you actually go do.
That's great. And if you have enough smart people on the team, then you can actually start to connect the dots between different areas and say, okay, if we're prioritizing this, then we also co-launch that. That actually creates a new opportunity over here. You'd said in the letter, the world of 2034 is going to look very different from today. And something I want to call out is another comment in the letter is over the last year alone, we've added support for more than 50 new payment methods, taking the total to over 100. Especially for our US audience, this seems particularly relevant because of the last year, we saw RTP and FedNow both go live. And yet it's true that in the US, credit cards still dominate as a form of consumer payments. So I'm curious how you see the mix of payment methods shifting over the next decade and how you translate that into where you think about where Stripe Connect should be going.
Yeah, so maybe talk about where the world is going first in a payments context, and then maybe a little bit more broadly. In a payments context, you're right that when we started in 2009, 2010, everyone assumed that the payment method mix was static. Everything that can be invented has been invented, and this is what we got because we have e-commerce. Whereas actually, there's been a fairly dizzying rate of change since we started out. You have a lot of new RTP schemes all around the world. UPI is obviously the most famous one in India, but maybe undertold story is that there are so many RTP schemes in all these various places. And now, we'll probably see FedNow before too long, whenever it actually starts rolling out in earnest. But we even have, RTP in the US, kind of the clearinghouse system that's called that. And so we do have real-time payments in the US. And, now often when you get a payout from Stripe, it is powered by RTP underneath the hood rather than ACH. And so, again, the rate of change is really interesting. We think the BNPL stuff is really interesting. So this is folks like Affirm and Afterpay and Klarna, where they are providing credit to a broader segment of the economy than traditionally would have gotten credit. We see a measurable conversion uplift when businesses offer buy now, pay later methods at the point of sale. And again, we're an unbiased party in this, right? We just want to make sure that, the transaction goes through and the merchant gets paid. We're optimizing for conversion, but we see that conversion lift because I think they're making kind of credit more readily available to people who otherwise might not have access to it. So tons of changes happening there. And I think it's just clear that we're not done yet. There's going to continue to be a rate of change, and businesses are going to need to keep up with providing all of the ways to pay that their customers demand, because they absolutely don't want to be turning people away for just a prosaic lack of payment methods reason. And then more broadly, I don't know about you, but I just love working in technology at the current point because the rate of change is dizzying. We look at all the stuff going around us in AI. We're using AI very extensively at Stripe. We have lots of internal LLM usage, and we're training up our own models. It's very helpful for anti-fraud, but it's also helpful for all kinds of, what you might expect of us. But it's also helpful for all kinds of various kind of productivity improvements as we do fairly rote tasks, where we find you can increase human productivity a huge amount by giving them kind of an AI helper. Everyone's talking this week about Devon on Twitter, the AI coding assistant, and it's if you watch the demo, it's really amazing stuff. But there's going to be a lot of Devons for a lot of different professions. People, an assistant at your side to help you with all the tasks you're working on.
Yeah, and I want to get there because the letter is a lot more far-reaching than really focusing on fintech and payments, and I love that about the annual letter because it's focused on what's going on in the world around Stripe and how to think about how that translates back to Stripe. But thinking about digital payments and particularly the call out to payment links and no-code payment acceptance, and maybe moving outside the U.S., it makes you think about QR code payment acceptance or soft POS, mobile POS device, which especially in markets like China and Southeast Asia has helped a lot of offline transactions move online. I'm curious how Stripe thinks about moving more and more into offline commerce and improving that, whether through smartphones, feature phones, or other payment methods.
Yeah, in the United States, there is a very clear delineation between in-person commerce, where you present a physical payment credential and it's swiped or tipped or tapped, but there is a real interaction that happens between the payment credential and a physical terminal. And then e-commerce, where you're typing something into an app or online or whatever. That's a very hard distinction in the United States, both in kind of the payment systems and also just kind of culturally, people think of them in two categories. You mentioned the soft POS phenomenon, but I think what people in the US don't realize is that outside the US, it all kind of blends into each other, where you have QR code based payment systems that are kind of for remote payments or for in-person payments. They're just kind of all the same thing. And in particular, we know with the RTP payment systems that they generally blend the in-person and remote use case. And I think it's an interesting question, how that's going to play out in the United States, but it's a fascinating trend that we see in, a whole bunch of non-US markets.
And lastly, I won't give away too many of the spoilers. I think people should go and read the letter themselves, and hopefully this is a good lead in. But the end of the letter really goes into the broader world of farming and agriculture, of climate, of robotics, of AI. AI is obviously the hot topic in the tech world of the last year. And so you had touched on this, and I want to come back to it, finding interesting use cases for machine learning and even large language models at Stripe. I'm curious, is there one that really jumps out at you where even you were surprised? You said, oh, actually, this is interesting. I didn't even think about this as being a potential AI use case, but this really makes sense for Stripe.
I think a lot of businesses have just fairly routine tasks that they need to do a lot of day after day. And LLMs can be really helpful to getting those done by doing work for you in advance, by doing some of the task and, human spot checks their work or something like that. And so I would say any process where you have to do kind of the same thing multiple times, you can get some of the pre-work done for you by an LLM. An important thing we've done is there's always a desire in AI for CEOs to have hot takes for whatever reason. Every company had a board meeting last year where the board said, what's our AI strategy? And the CEO presented, here are the 3 things we're doing in AI. And I think that's just a bad tendency, because you don't want to be too tops down about it. You want to be bottoms up. And so we have developed really good AI tooling at Stripe, internal LLM tooling, where people can, use a variety of different LLMs in a, kind of secure and data privacy and everything preserving way. And so we've seen all these interesting use cases that you totally wouldn't have predicted just based on kind of emergent behaviors. There's query optimization, there's kind of for copywriting, there's kind of all kinds of stuff you can imagine. But I think that bottoms up use of AI is very important, because for some reason companies get in the habit of wanting to do very tops down, this is our AI strategy. I don't think that's the right way to go about it.
Well, I appreciate you making the time to talk through this with us, and congratulations again on everything over the last year and the next decade ahead for Stripe. For anybody listening who wants to get a deeper dive on this and hear more, you can attend the Stripe sessions coming up in San Francisco, April 23rd to 25th. And for anybody who can't make it, there will also be live streams, and you can learn more afterwards at stripesessions.com. So John, thank you again so much for making the time today.
Thank you. It's a really exciting time at Stripe. It's a really exciting time in technology broadly. So delighted to just be able to chat about it.
Cheers. Have a good one.
Right. Take care, Nick.
Bye.